Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to the show.
Jim, pleasure to be back on the show.
John, will Elon Musk's ownership of Twitter change how you use Twitter?
It will not change it at all. All this Twitter controversy is about how it has been used to spread misinformation and hate, and to what extent Twitter should moderate the worst abuses. It's possible that Twitter could become a free-for-all that channels online and physical harm at people, but Twitter has also been used by dissidents to push information into the public domain, which has made abusive governments like Iran very unhappy and eager for access to the actual identities of such people. Elon's quest for cash flow may require accommodating the demands of thug governments, and Twitter could end up suffering a significant drop in membership usage. But none of that is relevant to me because I only use Twitter as a notification system. People can, at their leisure, choose to follow me or unfollow me. I don't have to worry about that at all. When I publish a Kaiser Watch episode on YouTube, I also create a blog comment that's posted on my website, Kaiser Research, which links to the YouTube audio that you and I are recording right now. And my blog includes written comments and graphics that help illustrate the audio conversation that we are having. And then I tweet that link to my website to my Twitter followers. And when they get it, there'll be the link back to my website. There'll be the handles of the companies. If they have a Twitter handle, will be embedded in that tweet. And this alerts them that, hey, John Kaiser has published a new Kaiser Watch episode. They don't have to worry about some verification, because if they click on that link, they'll go to my website and they'll know there's nothing else like it. So I don't have to pay money to get a blue check mark or even worry about anything like that. And public companies should use it in the same manner. When I do my updates on companies, I check their website and I grab their Twitter handles, add it to my database. It's there for my subscribers to click on and check out the company's Twitter profile and follow the company if they are interested in them. And I myself do it. If a company is one that is part of our bottom fish or favorites recommendation, or one which I think might become interesting down the road, I will also follow them, because the role of Twitter is not for people like myself or these public companies to get into conversations with other people. It is mainly as a broadcast medium that is an alternative to email, which really doesn't work anymore because you have all these spam filters, you get blacklisting going on, and you have in Canada you have all these double opt-in requirements, which make it such a pain. People don't even bother. So companies can't really build a meaningful email list anymore and send their press release notices or anything like that to them. It is much simpler for them to create a Twitter account, and every time they posted a news release to their website or an updated corporate presentation, or even found an article that's hosted by some other website that is relevant to their particular story, put together a tweet, embed those links, include the basic headline information, and send it out to whomever is your follower. And people are going to be following or unfollowing you at their own discretion. You don't have to worry about them opting in or opting out. Now, this is really important for these public companies, because their biggest challenge these days is, how do we build an audience? And you can pay these various newsletter writers and other websites which are free to the public, and they get sponsored to write nice things, and they blast out their missives to their particular following. But that doesn't really have the stickiness that is created when somebody, an investor out there, decides they're interested in a particular company and follows it. Now, what's really important these days, that's less than 10 years old, is all these little social media networks that are out there. And even myself, I don't use Facebook or anything like that, but Kaiser Research also operates a Kaiser Research online forum on Slack. And Slack is really intended for the business community. Whoever owns the Slack forum, they control who gets to go in there. They send them invites. I'm able to moderate it. I've created 30 channels, theme-based channels, and everybody who is a member, an active member, they can post comments, ask questions, and it's private. It's invisible. There's no advertisements or anything like that. The downside is it's not totally free because Slack, which is now owned by Salesforce, wants to charge about $9-10 a month, which would cost $100 to $120 a month, which of course I can't afford from the $450 membership fee to cough up a quarter of that to Slack. And so the downside is what used to be they used to allow the most recent 10,000 posts to be visible, which was based on the volume in my Slack channel, was about a year's worth of comments posted by people. But in September, they switched it to a 90-day limit so that it's only whatever has been posted in the last 90 days. But that's still good enough because I mainly use it not to dig up stuff that was posted several years ago, but the current conversation. What are people concerned about? My members, they will post links to news releases. They'll ask me about something. I get to discover what they're interested in, what questions they are, and what I haven't updated them yet. And so it's kind of a collaborative environment. And this could be used by any investment club out there. It would be free. Obviously, for businesses, the $120 per employee that it costs is a drop in the bucket. It's an excellent tool for businesses to enable collaboration amongst their employees, but also for this whole world of investment clubs, groups, invitation-only groups. Yes, there are facilities like CEO.ca where you can have private rooms, but these systems are owned by groups which actually use analytics to extract information from the activity of the members of these systems. There's nobody doing that with the Slack system, so it is like a private club. And the reason the public companies should get their Twitter account is that there's lots of influencers out there who are members of Twitter, use Twitter to retweet, use Twitter to get notifications from companies, and they also are members of their own various private social media networks. So when a company blasts out a tweet on saying, yeah, we have this, we finally got our feasibility study done, they're alerted to it, they can check it out. If they like what they see, they can retweet it, they can like it, or they can also post the relevant link into their private forum or their own network. And then, of course, if those people like it too, they can repeat the process. So having a Twitter account costs nothing to these companies. The only work that's involved is to put together the tweet with the link and just stay away from replying to anybody who's bashing or trashing you. That's really the way to go. And whatever happens to Twitter, as long as they allow one to do this without charging a cost, it doesn't matter if the rest of it turns into a shit show of hatred or they end up censoring everything. The basic usage of Twitter as a notification system for groups that have their own website which validates their existence and everybody knows what the content is. The content isn't the tweet itself. It's actually what the tweet points to. That's what my use of Twitter is. That's what the public companies should do it. And I encourage any public company that hasn't already created a Twitter account to go and do it and make it part of their indirect viral marketing strategy.
John, is Bell Copper any closer to resuming work at its Big Sandy emerging copper discovery?
Well, Jim, on October 6th, the Kaiser Watch episode talked about Bell Copper, and the problem that it was facing at the time was that it had secured a permit, it had a drill rig lined up, a special kind of drill rig that can pre-collar and drill faster through gravel and have a stable hole than what they were using before. But the company had run out of money, and it was waiting to see where and how it would finance work, and it didn't want to resume without having money in the bank. And so on November 15th, they bit the bullet and announced a private placement of up to 25 million units at 12 cents with a full 2-year warrant at 20 cents. And that would raise $3 million. And you're just sitting there thinking, wow, this stock in earlier this year in February, March, jumped from sort of 20 cent level into the 30 to 70 cent range, where it traded and attracted a lot of attention until early June, when the company put out the results of what everybody had expected to be a discovery hole. And the problem is that the market didn't really understand what the Big Sandy story was about. Now, Big Sandy was staked by Bell Copper, by Tim Marsh in 2020, after he got bored waiting for Cordova on the Perseverance project to find the missing top of the Wheeler Wash stock farther north in Arizona. Now, Tim had worked on the Big Sandy project area about a decade ago for Bell Copper, and what this is all about is there's this basin. It's about 13 kilometers wide. It's got a range on the east side. It's got a range on the west side, and in the west side is a small mountain called Diamond Joe, which is the root of a porphyry system whose scale is very large and whose like remnant evidence, mineralization, that's not economic or anything. It's an indication that this was once a really one of those big giant copper deposits. And for many decades, companies have tried to find where this top of this porphyry system slid. And the reason it disappeared is, these deposits formed, about 75 million years ago, but then in the basin and range, rifting of about 15 million years ago, that whole region from Nevada all the way through Arizona, it started to stretch, and you had these, the land sort of drop down. So these basins are all drop down area, and sort of a shallow faulting would cause literally these ranges to be, or these mountaintops to be truncated. So the top somehow slid down into the basin, and Tim tried to find it a decade ago and drilled some holes in the middle of the basin, but couldn't even get to the bedrock, because it's a couple thousand meters deep in that area, and gave up. And the interesting story is, while waiting for something to happen at Perseverance, he revisited that area and started sort of wandering around in the range front on the eastern side and saw exotic copper in the rocks. Now, obviously, the source rocks that are exposed there could not be the source for this copper. So he figured out, okay, there's a copper system somewhere under those gravels that water is leaching the copper. It's migrating it through the gravel into even these other rocks on the flanks, where it's ending up dropping out as this interesting type of copper, which it never forms an economic deposit and is remobilized from its original source. And that got him thinking, oh my gosh, this thing slid maybe 13 kilometers from the top. Well, never imagined that it could have traveled that far, and he staked the land position. He's never published a map of exactly where the claim boundaries is, but we pretty much figured out where it is based on the bits and pieces that he has published. And he started a drill program, a vectoring program. They did a geophysical survey, and it showed this fabulous NT anomaly at about a 400-meter depth, and that sounded pretty good, not too deep. Well, anyways, they drilled through that, and it was over 1,000 meters deep, and the anomaly is an illusion, probably caused by clay in the gravel portion of the basin. But he did hit what was the edge of a porphyry system. They drilled another hole to the south, and they hit what was sort of the country walk, the older country walk that the monzonite porphyry stock had intruded. And then this last year they started a whole BS3. That's the one which it took 3 months to really get down to the bedrock. And then they encountered a leach cap, which was a very good sign. And then they encountered a couple hundred meters of chalcocite enrichment, between 1,300 and 1,500 meters. And that's when they announced that's when the market got really excited, because they said, oh, he's found it. He's found where the missing top of Diamond Joe has ended up. And however, he was using an XRF gun to shoot the mineralization, and he kind of suggested, well, this is deep, so it's going to have to be an underground blockading operation, so it's going to have to be over 0.6% copper, and he's already hinting at the time that this is not going to be a mineable system, what we have right here. And when the drill went into the primary copper below that, it was a lower grade copper, and he realized, no, this is more the pyritic shell, and also what he's seeing in terms of chalcocite, which is the original chalcopyrite that's been dissolved and then percolated down through the rock and then reprecipitated. It usually enriches the grade. He says what's underneath this is not the source of this. It's not strong enough copper in it. And so obviously what they had hit was more a lateral flow, and that the center of the supergene enrichment blanket, where he hoped to see these 0.8% or higher grades, that was going to be off center from where they had hit. And they also realized that the system was tilted, and based on all their triangulation, they said, oh, we now know where hole 4 is going to be. But what he also wanted to do is, based on this estimate, he wanted to see if he could nick the edge of the copper shell, the primary copper shell. And so they pushed that hole all the way to 2,000 meters. And when they eventually surveyed it, they never did hit the primary copper shell. And this big, long intersection of 500 meters, it only graded 0.16%. The 200-meter chalcocite intersection only graded 0.4%. When this came out, the market tanked on him, because the market said, you found the missing top of Diamond Joe, but it doesn't have the grade to be a mine because this is too deep. If it were at surface, maybe it'd be interesting, but this was too deep. And when they surveyed the hole, he realized that the reason they never hit the primary copper shell was the hole, which was started off at an angle, it had ended up straightening. So it was literally running parallel to the primary shell, so would never have hit it. And of course, when the stock tanked, and having spent all this extra money pushing this hole down there, and at the same time we had the resource sector also got caught up in the very negative market decline this year, and the whole summer and fall period was terrible for the resource juniors. Nobody wanted to give him money. Everybody just walked away. And he kind of, didn't help the situation because he had not published any graphics. So retail investors, while the geologists read what he had written, said, wow, incredible, you found it. So, and you now know where to drill that kill shot hole, which should hit the center of this porphyry stock and get the best part of the supergene enrichment blanket. But geologists have no money, and all these big companies that had signed NDAs probably to farm in, they ended up being distracted by the falling copper price, which when this all started was $4.50 a pound, and then it had dropped to $3.40-$3.50 a pound, and so they were all unhappy about the big recession that this interest rate hike strategy was going to create for the world, and so he couldn't get any sort of support from that group either. But he started doing presentations to geological societies in September. He's done several of them. And even though these people can understand geological word salads, they also prefer to look at cartoons and graphics. So he finally capitulated and produced some graphics. And I loved it. My October 6th Kaiser Watch episode featured some of these because it helped me, feel confident that I understood what was going on. And after not getting any bites and watching the stock sink lower, they bit the bullet. It has this, tremendous dilution, but because it's up to $3 million, it's very important. And this financing also has an acceleration clause. If the stock trades at 40 cents for 20 consecutive days with a volume weighted average price, they have the right to shorten the expiry to within 30 days. But it's at their discretion. Once that trigger is hit, they have 20 days to pull the trigger and say, okay, now you guys have 30 days to exercise. Now, if this financing, when this financing closes, there'll be a 4-month hold. And so obviously he doesn't want to, abuse the poor shareholders and pull the trigger before the 4-month hold is happening. But he does have a bunch of warrants, about 7 million or so, that are around 25, 26 cents that expire in March, and most of them in the first half of June. And those would raise about 2.4 million. But the goal right now is for them to see if they can get $1 million in the bank really quickly from people who understand the story, who realize that getting in at this price with a full warrant is a chance at being 4 months away from confirmation of a world-class discovery. They get $1 million in, they're gonna get the drill rig in the field, start drilling. They'll close the rest of the financing. With this pre-collar rig that they've lined up, they think that instead of grinding away for 3 months through the gravel, it should take them only a month. So to get down to bedrock. And once they're into bedrock, if his whole modeling of where the heart of this diamond gel system is correct, they'll first hit a leach cap, which will be good news. That'll get some excitement going. And then they should hit the supergene enrichment blanket if it is there. And if he is correct that what he hit before is lateral flow of the supergene enrichment cycle, that the grade here is much bigger, his XRF gun will tell him that. So they would very quickly know we've got this system. The assays would still probably take 6 to 8 weeks. That's just the nature of it. But that he would put out a press release like he did before earlier this year, and this would kick off a new trading frenzy. The private placement might not even be free trading yet, so he probably wouldn't pull the trigger, but he'd probably get those 25-cent warrants exercised. And even if he has managed to get the entire 25 million units done by mid-December, he'd like to get the drill started in December and have it grinding through the boring gravels while everybody's busy with the holiday season, and then in January have the drill ready. But if he gets it all done, so what? If he has the goods, and then the whole period is over, we'll know sometime in April or so if they have it, and then he can pull the trigger and shorten that exercise period, and all those warrants exercised would leave them with an extra $7.4 million in the treasury, 204 million shares fully diluted, not horrible, and with this deep, very interesting, large, potentially high-grade copper system. And this could become one of those 5 to 10 bagger type stocks and then go up higher as everybody flocks to a major new discovery. And a lot of the people who do understand this story, they say, yes, you have made a significant discovery. You don't yet have the proof, but the context is such that if you get that hole in there and confirm it, this stock will go crazy.
Can you give us a summary of Verde Agritech's third quarter conference call?
On Monday, November 14th, the company released the results for the third quarter, and it held a conference call on Thursday, November 17th. The entire call was 1 hour and 17 minutes, but the first 21 minutes was the CFO going through the results. Now, in summary, for the first 9 months of this year, Verde Agritech generated in Canadian dollars 63 million in revenue, 3 times what they had last year for that period, and $23 million in cash flow, a simpler way of saying EBITDA, and which was 5 times what they had last year. And the volume of K-Fort that they sold was 503,000 tons compared to 226,000 tons last year. The stock had hit almost $8 on Monday, but it has since retreated below $6. And the best explanation I can give for that is the market has realized that even with their revised guidance of back to, for 2022, back to 87 million revenue and 31 million cash flow, which is what they had originally guided in January before boosting it in May, but had to bring back to the original level. They might not be able to make that. And when they report their annual results in mid-April of next year, the market's realizing, well, they may not quite meet their guidance. And in the conference call, Chris Belosa pretty much said we are working very, very hard to meet this guidance. And of course the market says, well, that's kind of a warning that it may not happen. Now, it doesn't really matter whether or not they meet this guidance. It was always a stretch, in my view, to have Plant 2 fully operational. The primary fertilizing season is in Q2 and Q3 in Brazil. And they had hoped to have Plant 2 ready by early July, which would allow them to produce an awful lot of K-Fort for delivery. And they didn't have it ready until the end of August. And then they discovered that there was some groundwater problem. They had to build a new bridge. They had to do upgrade the road. And while this work was being done, they could not ship anything. In the conference call, we learned that they had to cancel 100,000 tons of K-Fort that farmers had ordered. And of course, if you couldn't deliver it in time for planting, the farmers don't need it. They have to go somewhere else. So the delays in Plant 2 and also the access road delay, that pretty much ruined the upgraded guidance that they gave in May, but also has made it tough for them now that Plant 2 is fully operational at 2.4 million tons per annum capacity. And Q4, Q1 is apparently difficult for all the fertilizer companies because contrary to expectations earlier this year after Russia invaded Ukraine, that there might be severe shortages of potash, potash was never put on any sanctions list, and Belarus, which lost its transportation corridor to Lithuania, appears to have figured out how to get its potash out to the market via Russia. The ports in Brazil are bulging with potash to the point that it is now being diverted to other countries. Now, the price of potash, it's no longer $1,000 a ton for KCl, but at $740 a ton, it's still high, and that's basically as a result of the boom in agricultural activity. And right now, the farmers are a little concerned because all these interest rate hikes are threatening to force the world into a recession, which always results in lower food consumption. So there's a bit of nervousness in the entire system. But this, given that it wasn't going to be until sometime in summer that Plant 2 was going to be operational, the shortages weren't going to make a huge difference to Verde Agritech. It was really all about selling maximum capacity at their 600K Plant 1 capacity and collecting the elevated price, which started late last year and has persisted through most of this year. And at $740 even today, it's still well above the $360 a ton that they use as the benchmark for their feasibility study for the various expansion strategies that they have in there. And they are now, during these next 2 quarters, they will be doing a discounting strategy because they're obviously competing with the fertilizer companies trying to unload their surplus potash that ended up being shipped there in anticipation of shortages. But in terms of what percent Verde Agritech has of the total potash demand for Brazil, it is still relatively small, and they have done very well this year in expanding supply to everything that they could sell. They were sold out earlier. Now they are no longer sold out. Now their troops are working hard. They are using both agents, independent agents, as well as an in-house direct sales team. And really, one needs to not worry about making or missing the guidance for this year, because with Plant 2 now operational, it's going to be all about how much will they be able to sell next year. And one of the questions that also came up in this in the Q&A was about creating a granular version of K-Fort. And this was interesting because right now they sell it in a K-Fort in a powdered form, but the really big farmers don't want to deal with the powdered form. So this limits the total farm market available to them with the powdered form. The big guys, they want a granulated form because it's easier to deal with. And the company right now, like the 3 million ton per annum capacity, the powdered form, that's still plenty of good. The priority is to sell the powdered form. But they are doing work on the granulation process. And the problem with turning K-Fort into a granular form is that you need to add water to it and then some binder. But then you need to squeeze the water out again. And it's the cost of drying the granulated K-Fort that seems to be a bit of an obstacle. But they have been working on, researching methods of doing this so that they do not have to do the drying portion. So this became an issue. It's a bit of, ahead of the curve. They still need to sell out all the 3 million ton capacity, but it is something that we will have to watch in the longer term for if we want to see them go to 10 million ton per year and then ultimately 50 million ton per year. This is they're going to have to solve this granulation product because that's what the farmers want. Now, the first batch of questions were the sort of tedious accounting questions about costs and revenues and this and that, and whether you're assigning capex as an expense or as an investment on the balance sheet. And I myself am not that interested in that sort of discussion, but what intrigued me was that the company clearly has gone from a development company, conceptual company, to now it's an operating company. And so it's attracting a different audience of financial analysts who are looking hard at the numbers, they're looking at the growth projections. This is a very positive sign. This is what institutional audiences require. So it was good to see these types of questions, which are boring to retail investors, boring to people like me who are really interested in the growth and expansion potential. Another question that came up was about BioRevolution, and somebody had noticed that they're selling BioRevolution at a 90% discount from the list price. And Chris Veloso's explanation of that was, this is an entirely new product. I mean, taking K-Fort, which is just breaking into the farming market as an alternative source of potash, loading it with microbes and rehabilitating the soil in the process. The farmers are going to want to try this out and see that it is actually happening. And so, you sell it for just a modest markup from cost, and you get them to try it out and demonstrate that it is indeed working. And there were also questions about where's the U.S. listing, and Chris wouldn't give a definitive answer in that regard, but he did end up finishing off the call by saying, we are working on a brand new website, and people have grumbled that the old website doesn't navigate very well. So hopefully, this new website will be will make the whole story much more accessible to a broader audience. And he also mentioned that there's about 100 testimonials in Portuguese from farmers that have been posted on the Portuguese portion of the website, and they are translating them into English, and the new website apparently will have all these testimonials. And that could end up being a big marketing boost for the company because, from us far and abroad here, we wonder, well, what do the farmers really think about this stuff? Do they like it? Is it working? And to see the actual testimonial, I mean, most people don't speak Portuguese. Maybe they speak Spanish, but not Portuguese. This will make the plausibility of what they are accomplishing in Brazil far more accessible and believable to what hopefully will be a major market in 2023 when they get their NASDAQ listing and they start demonstrating that, by the time they're reporting whether or not they made their guidance, by then they should have booked lots of orders for that big window Q2 through Q3. And that's really what investors who are fretting right now about the stock sinking back to $5 or whatever, they should just forget about that. Don't try to trade this. Just own it and get set to buy this stock at any whatever sort of year-end price we end up with, because now the company is positioned to grow revenues 4 times higher than it was in this year. This company is now positioned to really take off in 2023.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.